Yo, what it do? Excuse me. This is part 2 of the video of we just going over ICT freak stuff. Real advanced, algorithmically price, delivery, engineer liquidity, accumulation, manipulation, displacement. And once again, these key levels that I mark on the chart is marked once I get enough data. And with that being said, I think it's time to dig into this video.
You know where your first partial, you know where your second, what you're looking for. You know what you're going to wait. You respect the risk that the markets provide and offer many times, but you're not paralyzed by uncertainty. You know exactly what you're looking for. You know what you're going to wait for. And when it forms, you take the trade, you take the entry, you know where your stop's going to be, you know where your first partial, you know where your second partial, and where your target's going to be. You're not worrying about it because you understand yourself and you understand what the market's likely to do because you've been studying it with great detail. Not just, oh, let me watch a couple videos of ICT. I got this lick. Let's go. No, that's not how this works. So, ES. We had a real gap here, and that was where I took your attention to. Very specifically, look here. That's going to be the draw. Imbalance, fair value gap, rallied. Right in there. So, in between here and here, let's do the same thing we just did. There's our low. That's where our price point started. Up to here. In that run right there, you can go into the lower time frames for your own homework. I'm not going to do it here. This is for your study. From here to here, on your fib, let me help you also, because I know some of you are probably saying, can you open up your settings? You read my mind. Here's what my Fibonacci settings are. Okay, so I'll leave that up here for a second so you can get it. And these levels down here, the 0.25 and the 0.75 with 0.50, that is going to give you your gradient levels for grading a price swing, which we're going to go into next. Okay, but on the lower time frames, like 1 minute and 5 minute charts, look at that range around the 25, around the 75, the 50, and the 25 respectively, and see if you don't see my PD arrays manifesting there. We have this run down here. Same thing. You're going to do this is for homework. From this low up to the high of that gap right there. That's the draw. So if you were a swing trader or a short-term trader or a day trader working within this profile trying to find longs, where do they form? Price-wise, it's around this gradient, the 50%, and the 25%. Go into your lower time frames. I could make this about a 5-hour long video, which I don't want to do, but I promise you, if you go into your lower time frames, you're going to see these levels. There's PD arrays and setups that form there. Study that. Okay, this will help you see algorithmic price delivery and that you can anticipate them, where everybody else out there is waiting for something. Let me ask you a question, okay, for the folks that trade market profile and trade with VWAP. Where's VWAP going to be on Thursday at 10 a.m.? Right. I can tell you where price is going to be, and then I have elements in time that I use where I know they're both going to meet. See, you're a victim. You're a casualty to uncertainty, and you have to wait around for something to react to. Just like an overbought or oversold, you can't do anything until that overbought or oversold indicator tells you. You can't do anything directionally until your MACD says it's sloping down or it's sloping up. I don't have that. My students don't have that. And when I talk to you this way, I'm not trying to be arrogant. I'm not trying to be condescending. I'm telling you what I'm doing is light years ahead of everything that you're doing right now. That's why when my results are being shown to you, it looks like cherry-picked. But what do you do with it when I'm doing it with weekly charts now and daily charts, and it's delivering? How many things did I say in addition to this that didn't happen? That it was only this? And I say these types of things because I want people that are on the fence, that listen to these goobers, that just don't like the fact that I'm doing this for free and I'm that good. They want to take your attention away from it. And I'm trying to be respectful to them because I could literally go out here and smash all of them. But I don't want to do that. That's not why I'm here. I want to leave in November, on a high note, a good note, where I'm not adversarial to anybody. And I want even the people that don't like me and are selling other courses, I want them, whether they openly say they did it or not, they can secretly add all the stuff I'm teaching. If it makes their product better, that makes them better. And that makes their patrons better. That's all I care about. I don't want to hurt anybody. I don't want to make anybody, lose their business. Okay? I want to help. That's all I'm doing this for. I love it. I enjoy it. And I'm passionate about it. And it's not limited to just the people that like me. I have a lot of people that are long-term followers that were haters of me in the beginning. So let's go into a lower time frame discussion on ES. Let's go down into let's just drop down to 4 hour. So here's that daily discount fair value gap. And the market rallied, consolidated, worked inside of this imbalance and into this breaker. We have a low, high, lower low. Last up close candle, extend that in the future, hits it here, hits it here. My eyes don't, I gotta look at it and see. Not sure if that one hit it too. Yeah, it did. So it hits it here multiple times. Okay. Now, this breaker is not a supply and demand zone. Okay. Sam Seiden and those who follow him, if they were to see that as a demand zone, okay, now it's no longer fresh. It's definitely stale bread now. It's a crouton. They would never use that logic. Okay. My PD arrays, as long as the narrative stays intact, looking for higher prices, these PD arrays can be reused. Okay, their sponsorship doesn't expire simply because it's traded to it before. We're in a large consolidation here, buy side here. The market rallies up, creates another area of equal highs. It drops back down. Where is it dropping down into? Inefficiencies here, and look real close. You see that right there? What is that? What is this little thing right there? I'll give you a second to think about it. What did I tell you ES was going to do? Go higher, right? Up into that gap. That's what these two blue lines are up here. Okay, that real liquidity void, which is the highest portion of that volume imbalance on the weekly chart. So if the market's going to gravitate up to there, we're not looking for shorts, folks. So we wouldn't look at this as a rally up into it to go short. We don't want to see that. So if we can see it go above it and close above it, it does it on this candle here, but we're on a 4 hour chart, so it's definitely going to do a close on an hourly chart or a 15-minute chart, but we're going to just do a top down. This fair value gap would be treated the same way I told you I would want to see the dollar index fair value gap to be an inversion fair value gap. That means that we see it go above it and then treat it as support. Look at the bodies of the candles. That's the narrative. That's the real story is in the bodies. The wicks do the damage. Yes, we wicked through it, but look where it closed. We traded down. Look at the bodies close right there. That's consequent encroachment. That's the midpoint of that gap right there. Here, let me make it nice and obvious. 41.82 1/4. The open on this is 41.82 1/4. Oh, look at that. Now you're going to tell me, you're going to argue with me, okay? Dollar Menu Mentor, going to tell me that that's buying and selling pressure, that this happened to make that line up exactly right there. Really? Really? I'm sorry. I'm sorry that nobody told you in books before me. I'm sorry that you can't find it on your own. I'm sorry. But you have it now. So stop wrestling with me. You guys, you make arguments against me when I'm telling you something that works phenomenally and how these markets really book price. Inversion fair value gap. If you ever have an inversion fair value gap, and here's for your notes, folks. I was going to save this for the book, but I'll give it here today. If you have an inversion fair value gap like that, and you have a fair value gap that's just below that level inside of your dealing range, meaning you have this low to that high, this inversion fair value gap, we would want to see it trade through that because we're bullish. Buy side, this later on, we don't know that's going to form yet because we're here. It rallies through it. We expect. ICT, tell me how to know when the fair value gap shouldn't close in. Here's one of those signatures. Inversion fair value gap. All this area should stay open, or a portion of it should stay open. Okay, so in other words, it would look like this. This is what you would anticipate as a fair value gap. Some of you would see this entry in this shaded area here. Some of my students would see this as their multiplier, meaning that they would go long when price dropped into it right there. Other students would see this and say, okay, I want to see it show me proof with the bodies respecting either consequent encroachment or the high of the fair value gap. Is there any body closing at the high? No. We do have a body close right here on this candle at the consequent encroachment. As soon as it does that, we now can trust that this area here should not be traded down into. Technical science, baby. Take notes. Take notes, Goldman Sachs. Okay? Because this is the real shit. So this run here goes for what? It takes out the buy side liquidity. Now, folks that just simply watch one of my videos and they see the relative equal highs and relative equal lows that we like to target. We don't look at this as we can trust this as a short, typical retail idea. We want to see something that's going to be at a later time used as a long to go right back there and target those individuals. So this area here would be a buy side liquidity pool. Okay, so that would be a first partial. If a student would use this entry on this fair value